So this indicator is predicting that over the next few candles, the market may come up all the way to this point before eventually pulling back down. If we took a long position here, you will realize that this prediction was actually accurate. And then here, the same indicator predicts that the price may come down all the way to this point over the next few candles. If we took a short position here, you will notice that this prediction was also really profitable. Ladies and gentlemen, this future predicting indicator is called MACD-based price forecasting, created by LuxAlgo. In this video, we're gonna go over what this indicator is, how to use it to trade, and we're also gonna combine it with two other technical indicators to create a simple yet profitable trading strategy. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, you want to go to TradingView and then load the 5-minute time frame of CAD CHF. Then open the indicator search tab and type in MACD-based price forecasting. And it's going to be this one by LuxAlgo. The MACD-based price forecasting is a sophisticated trading tool that predicts future price movements in financial markets utilizing the well-known MACD indicator. This tool generates forecasts based on how prices have historically behaved after certain MACD signals. By observing past price movements that follow specific patterns in the MACD, the tool predicts where the prices are likely to go next. Now, this indicator is really simple. It's made up of very few components. First of all, we have this line, which represents the zero level of a traditional MACD indicator. And then we have this red and green areas. These areas represent the MACD histogram, and it's basically a mirror of the traditional MACD. As you can see, if we compare it to the traditional MACD indicator, you will notice that whenever this area is green, the MACD is also green. Whenever it's red, well, the MACD histogram is also red. So it's basically mirroring what the MACD indicator is doing. This direct mirroring continues until the MACD histogram changes its color. At this point, the MACD-based price forecasting indicator begins to generate price predictions. It presents a forecasting area that shows potential future price movements. This area has an upper extremity marking the highest predicted price point and a lower extremity for the lowest price. Central to this forecasting area is a line representing the average of the prediction, indicating zones where there is a heightened probability of the price reaching. So this is how this indicator actually works. And for the purpose of explaining this, we're going to be looking at this bottom MACD. Now, when I play the chart, you can see that the forecasting area is colored orange. And as long as these histogram bars are colored red, the forecasting area is going to maintain this exact position. And then as soon as these histogram bars change color to green, like here, well, the forecasting area changes, producing a new future price prediction. And as you can see, it's going to be colored blue, indicating that the price is likely going to go up. And this prediction is also going to maintain its position until the next time the MACD histogram shifts to red, at which point we're going to get a bearish price prediction, like this, and so forth and so forth. Now, in order to use this indicator to trade, we need to add two more indicators to our chart. But before we do that, let's talk about the forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account on HenkoTrade's web trader platform. The reason why I think HenkoTrade is a great broker is because of their low commissions and spreads. On forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, HenkoTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,484.50, well, they're going to give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus as well as all the other perks, well, sign up to HenkoTrade using the link in the video description. Now, back to the video. So the first indicator that we need to add is this one called Twin Range Filter, designed by Colin MCK. Next, we're gonna add the higher high, lower low strategy, this one by Lonesome the Blue. Double click on the higher high, lower low strategy, and then on the input step, we're gonna change the left bars value to 3. For the right bars value, we're gonna change it to 4. We're also going to change the line style for the support resistance levels to solid. For the thickness, we're going to reduce this to 1 pixel. I'm also gonna flip these colors, change the green one to red and the red one to green. In the style tab, we're gonna disable the higher low, the lower high, and the bar color options. After that, click OK. For the twin range filter, the default settings are gonna work fine, no need to change anything. So how do we trade with these three indicators that we have here? Well, let me show you. So first, you want to identify an instance where the price is breaking and closing above the most recent higher high level. So this is our higher high level and this is our breakout candle. By having the price breaking and closing above this level like this, we get to confirm that the price is in a bullish trend. Condition number 2 is at the time of this breakout, we need to have a bullish future price prediction from the LuxAlgo MACD-based price forecasting indicator. So basically, we need to have this blue plot on our chart and to have it pointed upwards like this. This increases the probability of the price heading up to take profit. Our third condition is we want a buy signal to be printed just after the most recent higher high level. So this is our most recent higher high level. We basically need at least one long signal to be printed from here onwards. And as you can see, yes, we have this long signal here. If we didn't have any long signal after this higher high level, well, this entry would become invalid. Now, the last condition is to put a long position tool here. Then we set our stop loss. To do that, we're gonna use the date and price range tool, this one right here. So you draw from the most recent swing low to the close of the entry candle. We want our stop loss to be aligned at the center of this rectangle, which is right on this middle line like that. The reason for this is because most of the time, the swing lows are usually too far down to be used as effective stop loss levels. And then we set our take profit at 1.5 times the risk. Now, here's a very important point to remember, which is after you set your targets like this, you want to drag this tool to the right and you want this blue line of the future predicted price to go beyond our take profit level, like it did here. This is going to increase the chances of the price going up all the way to take profit. We let this trade run, and as you can see, it was profitable. And of course, we're going to do the opposite of this for a short position. So the first condition is we need to identify a break and close below the most recent lower low level, which happened around here. And then during this breakout, we can see that we had a bearish future price prediction, which fulfills our condition. Condition number 2 is we need to have at least one short signal printed by the twin range filter after the establishment of this lower low. So we mark it from here, and we need that from here going forward, there need to be at least one short signal here. And we had it here. This is going to increase the probability of the price going downward because this is a momentum indicator. And having a short signal like this indicates the presence of bearish momentum in the market. Now, to confirm our last condition, we have to put a short position tool here and we set the stop loss. To do that, we take the date and price range tool. We draw from the most recent swing high to the close of the entry candle. This is the middle point where we need to place our stop loss. The take profit is going to be 1.5 times the risk. We drag this to the right, and as you can see, this middle orange line of the future predicted price goes way below our take profit, increasing the probability that the price may go down in the future. If we let this trade run, you can see that it was actually a profitable trade just as predicted. In summary, this trading strategy combines the MACD-based price forecasting, the twin range filter, and the higher high, lower low strategy. It effectively uses market trends and momentum signals to dictate precise entry and exit points for both long and short trades, aiming to enhance trading accuracy and profitability. Now, remember to do extensive backtesting and forward testing of any strategy, including this one, to see how profitable it's gonna be over a longer period of time. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.